Hello and welcome to AI Market News by LM. We have got to talk about the massive whiplash we've just seen in the markets. Seriously, the USD/JPY pair has been on an absolute roller coaster. And the big question on everyone's mind is, where is it headed next? Is it about to crash? Let's break it all down.
So everything kicked off with this. Headlines started flying about a huge geopolitical breakthrough. You see, after weeks of really intense conflict and simmering fear in the markets, news broke of a surprise 2-week ceasefire agreement between the US and Iran. The main goal? Well, it was to de-escalate tensions and reopen a critical global artery for trade.
And at the very heart of all this tension has been the Strait of Hormuz. I mean, this narrow waterway is one of the most important choke points in the entire world, especially for global energy supplies. The blockade of the strait had sent this shockwave of fear through the markets. So the idea that it might reopen, well, that was the trigger for an absolutely explosive reaction.
So how did the market react? Honestly, it was nothing short of euphoric. This ceasefire news was like a massive release valve, and it triggered this incredible relief rally as traders just rushed to unwind all of their defensive safe haven positions at the exact same time.
Just take a look at these numbers. The S&P 500 jumped over 2.5%, but the really wild moves, they were in oil and the dollar. Crude oil prices plunged nearly 15% as all those fears of an energy shock just vanished overnight. The dollar index fell over a full percent, and of course we saw that huge drop in USD/JPY as risk-on sentiment came roaring back.
And to put that stock market rally into perspective, the Dow Jones Industrial Average added a stunning 1,300 points in a single day. It was the best day for the index in over a year, which is a really clear sign of just how much pent-up fear had been priced into the market. And this right here perfectly captures what happened to the US dollar. In those moments of global fear, investors pile into the dollar for security, right? That creates what's known as a safe haven premium. Well, in the blink of an eye, that premium completely evaporated. The selling was so intense that the dollar literally wiped out its entire advance for the year. A massive, massive reversal. But you know how these things go. Just as quickly as that euphoria arrived, this sense of caution, a market hangover you could call it, started to creep back in. The initial optimism is already starting to fade as the market takes a more sober look at the whole situation.
The really crucial point here is just how fragile this truce is. Reports are already coming out that the ceasefire may have been violated, and that's raising some serious questions about whether this 2-week pause can actually hold, let alone lead to any kind of lasting peace. Okay, now what's really interesting here is how this chart just perfectly captures the market's second thoughts. This is the USD/JPY chart. We see that massive crash on the ceasefire news, but then, look closer. We can see it starting to claw back some of those losses as that skepticism about the deal really starts to set in. The initial risk-on move is already seeing a partial reversal.
This slide really paints the picture of the market whiplash we've been talking about. Yesterday was all about that relief rally, soaring stocks, plunging oil, a falling dollar. Today, the mood has totally shifted. We're seeing cautious sentiment, crude prices are rebounding, and the dollar is actually regaining some strength. It's a classic case of the market reacting first and asking questions later.
So given all this back and forth, what are the forward-looking indicators telling us? Let's take a quick look at a few market gauges to see what emotions are driving things right now. First up, we've got the CME Fed Watch tool. And what's fascinating is that despite all the geopolitical chaos, the interest rate futures market is sending a very, very clear signal. Traders are pricing in a 99.5% probability that the Federal Reserve will keep interest rates on hold at its next meeting. The market just doesn't see a rate move anywhere on the immediate horizon.
Next, let's check in on sentiment through the lens of the CNN Fear and Greed Index. Think of this tool as a kind of mood ring for the market. It synthesizes 7 different indicators, like volatility and safe haven demand, to gauge whether fear or greed is the dominant emotion driving investors.
And right now, the index really reflects the broader market story. The ceasefire news was definitely enough to pull sentiment out of the fear zone, but we are far from greed. The mood is best described as neutral, and that reflects the deep uncertainty that's still out there. The rally was a relief, for sure, but it wasn't a signal that all is clear.
So, with the geopolitical situation still very much up in the air, the market's focus is probably going to shift back to the fundamentals. Let's look at the key economic data on deck that could drive the next big move.
Okay, based on the economic calendar from investing.com, we have a few critical US data points coming up.
We'll be watching the core PCE price index. That's the Fed's favorite measure of inflation. We also have the weekly initial jobless claims for a read on the labor market, and of course, the latest GDP figures. These numbers will be the next major test for this fragile market.
Which, of course, brings us right back to our central question. With a truce that's looking pretty fragile and crucial economic data dead ahead, is USDJPY set for a breakout, or is it headed for a breakdown? Right now, it feels like the entire market is holding its breath. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching, and don't forget to like and subscribe.